everyone, welcome back to my YouTube channel, and this is lesson 1. So in today's video I will be discussing about the basics of accounting. These are actually the basic topic that you need to understand as an accounting beginner in order for you to understand this subject, accounting. So let's look at this basic topic. So right here we have the basic topics in accounting. So we have accounting equation, we have accounting cycle, and this has to do with subsidiaries genus. We have general ledger, we have adjustment of financial statements, we have closing process and financial statements. And underneath here we have the elements of financial statements. You need to know these elements, you need to know their definition as well. So you need to know each of these elements and understand it. So we have assets, we have equity, we have liabilities, we have income, we have expenditure, we have profit. And I will explain in the later stage what these are. So let's just continue with our today's lessons competencies. So at the end of today's lesson, my students will be able to identify the term accounting. They will be able to give a very useful explanation of why accounting needs to be studied. So that is the aim of accounting. Identify entity and know different forms of entities, identify different uses of accounting, and have the basic understanding of the nature and function of financial accounting. So these are the competencies of today's lesson. So let's just continue with the definition of accounting. So here they said accounting can be defined as the system of recording, interpretation, and presentation of financial transaction with numbers and text in the form of financial statements, which are designed for interested users of financial information to help them to make decision. So excuse me, to get this definition, we need to look at the process of accounting. Let's look at the process of accounting. So by looking at this process, you will be able to define accounting. I mean, you'll be able to understand the definition of accounting. So accounting is a process consisting of 4 stages. So it has 4 stages. In the first stage here, the first stage has to do with financial transactions. So when this is when a financial transaction take place. So the first stage has to do with the financial transactions. This is when the exchange of goods and services between the business and the consumer, or the business and supplier, takes place. So these transactions that are related to the business, what we call financial transactions. So this is why I gave an example here, receipt and invoice. So financial transaction here, for instance, take place when the business exchange good with the consumers, whereby they have to issue the receipt to the consumer, or where the business have a transaction with the suppliers, and the suppliers provide them with an invoice. So this is what we call financial transactions. So in the first stage here, the first stage has to do with financial transaction, and the second stage here has to do with the recording of financial transactions. So these financial transactions are then classified and summarized in their books. For instance, the transaction that has to do with cash sales are classified in the cash sales account, and the transaction that has to do with assets are classified in the assets account. So this is what we call bookkeeping. And the third transaction, the third stage has to do with the preparation of accounting reports. So after we are done with the bookkeeping, so we use the information in our bookkeeping to prepare the accounting reports, and this is what we call the financial statements. So after we prepare these financial statements, we then communicate the recorded facts or the financial information to interested users, and I will explain what are these users in the later stage. So the later stage, so here stage 3 just has to do with the preparation of the financial statements and communicating the financial information in the financial statements to interested users. And then in the fourth stage here, the interested users will use this information. They will use this financial information or the recorded facts to make decisions. So the fourth stage has to do with decision making. So here they said decision making by interested internal and internal uses of financial information. So these interested users, we then use the information in the financial statements to make decision. And now we have different types of interested users. We have external users, the outside users, and internal users. These are the users inside the business. So I will explain later what these users are. So let's just continue. So the definition of accounting here. So accounting is concerned with collecting, analyzing, and communicating financial information. So this information is then prepared in the financial statements or reports, and is useful for those who need to make decisions and plans about business, including those who need to control those businesses. So this is what accounting is. And let's just continue with, excuse me. Let's just continue with the definition of entity. So I've been using these two terms, entity and financial information. So now let's look at the definition of entity and financial information. So here they said entity is the accounting term used to describe a person, a group of people, organization whose financial results can be determined individually. So in other term here, an entity is a business. So this can be the kind of business that is owned by one person, a group of people, or organization whose financial results can be determined as one or as individually. So we have different forms of entities or different forms of ownerships. For instance, we have sole traders. This is the kind of business that is owned by one person. We have partnerships. This is a type of business that is owned by two people. And we have close cooperation. This is a type of business that is owned by two and the maximum of 10 people. This can be family members. This can be family members running the business. And we have private and public companies. And right here we have the definition of financial information here. So here they said financial information refers to all the information that can be expressed in monetary terms or value. So these are the kind of information that can be expressed in terms of money. And so here they said all the transaction of an entity are converted into monetary values before being processed. And here they said financial information must be reliable. So the accountant here must be must know or must take this in account that the financial information they provided must be reliable, fairly consistent across all entities, and understandable to all users. So the users of accounting information must know what is going on. So this is what they mean by saying understandable to all users. And then we continue with the aim of accounting. So what is the aim of accounting? So the aim of accounting is to supply financial information in form of reports and statements. So here what they mean is that the main aim of accounting here is just to provide financial informations in forms of statements and reports to interested users. So in other words, the aim is to provide financial information about the performance, about the financial position, and about the cash flows of an entity. And so here, the main thing here, the whole point here of accounting is just to provide the information about how the business is performing and where the business is standing financially, and the cash flow of an entity, and how this is just how the cash is flowing into the business and then out of the business. So at the end of the day, this shows us how an entity has performed and where it is standing financially. So this kind of information is then used by interested users. This is what they mean, is then used to reach decision. So the interested user we just they will use this accounting information or financial information to reach decision about how to manage the business. For instance, the owner will use this information to manage the business. The investors will use this kind of information to decide whether to invest into the business or not. And the bank will also use this kind of information to decide whether to lend money to the business or not. So accounting is a specialized mean of communication used to convey a special message about the finance of an entity. So this is just a kind of communication used to provide the specialized, a specialized message about the finance of an entity. And therefore, here they say the accounting is a language which is used to convey financial information to interested users. So this is a language we use as accountant to convey or to provide financial information to interested users. And let's continue with the users of accounting information. So who are these interested users? So looking at this, so they said here, for accounting information to be useful, the accountant must be clear for whom the information is being prepared for, and for what purpose the information will be used. So the accountant must take this into account. They must really know who the information is being prepared for, and for what purpose the information will be used for. And so we have different uses of accounting uses. We have different uses of accounting information. For instance, here we have investors. So these are the people who invest money into the business or into the entity. So the investor will use this kind of information to see how their investment was used for, and to evaluate if their investment is safe and secure in the future. And creditors also, this can be, for instance, bank. So the bank need to see whether to lend money to the business or whether to require repayment of any existence loan. So before the bank lend any money to the business, they will need to know. They will need to look at the financial statements of the business to see how the business is performing, and before they lend that money. So and again, we have employees. So the employees need to see this information in the financial statement to see whether to continue with their employment. So they need to see whether they are secured, whether their employment is secured in the future. And also they will need to see whether to demand higher rewards for their labor. So before the employees demand an increase in their wage or in their salaries, so they need to see how the business is performing before they do that. And we have here we have the government. So the government needs to see whether the business should pay tax, and if so, how much, and whether it complies with agreed pricing policies. And the last one, we have management. So here, these are the managers. So the manager need to see whether the performance of the business need to be improved. So by looking at these financial statements, the owners of the business will see how the business has performed and whether it needs to improve. So those are the uses of financial information. And we have come to an end of our today's lesson. And in my next lesson, I will be discussing about the difference between financial accounting and management accounting. Thank you very much for being part of this lesson. So I will meet you in my next video. Thank you very much.